what do you think like potential exit opportunities are for Merit, and how would you advise them to think about or prepare for an exit? Because, like you said, I agree with your take. Cosmetics is like the SaaS of, e-commerce. I mean, some of these brands are selling for an incredible multiple. What do you think this looks like for Merit?
I think it's really good. I mean, if you look at just the exit potential, it's enormous. And so the cosmetics industry in general is highly fragmented. You don't have two cosmetics brands that everybody uses. In fact, in some ways, these big strategics out there have to continue to acquire brands because there's, people always want the new thing. And I did some just research into the market itself, and the global cosmetics market is about $103 billion in 2024. And and that's just the cosmetics piece. If you look at the U.S. and include beauty and personal care, it's expected to grow from 94 billion in 2024 to 107 billion in 2029. So that means that just baseline organic growth, if you keep your fair share, it should be about 3%. That's with basically doing nothing. The market's going to go at 3%. And you look at some of these acquisitions that have happened. I mean, Estee Lauder bought Too Faced in 2016 for almost $1.5 billion. They bought The Ordinary in 2021 for $2.2 billion. L'Oreal bought It Cosmetics in 2016 for $1.2 billion. Unilever bought Carver Korea for $2.7. Hourglass Cosmetics was about $250-300 million. The list goes on and on, where these exits are happening for, on the low end, hundreds of millions of dollars, and the high end, billions of dollars. I mean, the biggest transaction that I saw was a strategic to a strategic, which was P&G selling their cosmetics portfolio to Coty for $12.5 billion. But this is a really fertile acquisition market. And, the average deal size for most cosmetics companies is around $100 to $250 million in revenue. That's because those brands are probably doing $20 to $50 million in revenue. And so you're getting that kind of multiple. And so, it's very clear that Merit is going for a much bigger exit. And so I think that the way I would encourage them to think about this is they kind of have to think about, do they want to position themselves for an acquisition, or do they want to position themselves to stand alone and be public and go that route? Both, they have options right now. The fact that, I haven't seen this confirmed, but assuming that they're profitable, I know that Verse was profitable from day one, so I'm assuming that the company is being run in a similar way. But let's assume that they're profitable. Now they have options. If they're not profitable, the first thing they have to do is they have to figure that out. But assuming that they're profitable, then, if they're trying to position for an exit, they're, let's call it do $250 million in revenue this year. They're probably going to look to exit in the next 18 to 36 months. This could very well be a multi-billion-dollar revenue brand, but you want to sell before you're at that apex of your growth, because the acquirer needs to believe that there's more meat on the bone here. And so it's possible that maybe they grow this thing to $400, $500, $600 million in revenue, and then they look for an exit around that $2.5, $3.5 billion, which wouldn't be unheard of for some of these major strategic folks. Again, we're seeing comps, of around $2.5 to $3 billion from some of these strategics that are out there. And so the timing is quite right to be able to look at that. If they believe that if they want to keep all that revenue themselves and not sell, then they almost become too big to some point. So if they are doing $1 billion in revenue, well, it may be difficult for a strategic to say, hey, let me throw out $5 or $6 or $7 billion for this one brand, unless there's something that's truly compelling, that's a huge moat around there. I think the difficult part with cosmetics is also, the best part about cosmetics is that they're kind of easy to mimic, right? The actual positioning and things like that. And so, there's not going to be a single minimalist brand or clean beauty brand. There's going to be multiple. And so right now, Merit is having its day in the sun, and they're going to keep playing that song as much as they can so that they continue to grow. But there'll be a point in time where that growth will slow down, and then it's more about preserving the business they have as opposed to growing. And so they'll have to think about, maybe they're the ones that are going to start to acquire other brands, and they're going to do deals of $100 to $250 million and kind of become a strategic themselves. And so there's optionality right now. I don't think they have to make a decision, but the most important thing is to be running the business profitably so that they're not forced to make a decision that they're not ready for.
I agree. I think that was a great deep dive on the exit potential for Merit. I mean, it's just, it's kind of mind blowing to see how many large exits there's been in the cosmetic industry. I mean, I don't know another space in the e-commerce world that has had this number of large outcomes, especially at these strong multiple numbers. I mean, it takes me back to your saying of cosmetics is really like the SaaS of e-commerce. It's pretty incredible to see the outcomes of this industry.